Joining me for more, Siphamandla Mkhwanazi, FNB Senior Economist. So let's unpack this. I mean, Black Friday came. We had the November retail sales data, which, you know, we were all jumping on, but apparently people were shopping less in December. So what happened there? Is this a function of heightened sales for the month of November that people were kind of holding back for December? Or what is your analysis showing us there?
Right. Thanks, Tanya, for having me. So in South Africa, it has become a custom that consumers sort of bring forward their buying decisions to November to take advantage of just the specials that take place in the month of December. So for 2 years, just to put it into context, for 2 years just before the pandemic, in November, you would get an average year-on-year growth of around 2.6%. It wasn't the case this time around. We only saw growth in November of around 0.8%, which was relatively subdued level of shopping activity, which does mean that although the Black Friday specials did assist with lifting volumes for the month of November, it wasn't as strong a shopping activity as we have become accustomed to. Now, what we also see is that immediately after November, you see December sales, they tend to drop. For the 2 years prior to the pandemic, you saw a customary drop in December sales. And you saw something similar this time around. The only difference is that we didn't have as strong a November that we have become accustomed to.
So it's actually the November data which is the cause for concern, because ultimately we're coming from a lower base, but the drop with it from November to December is relatively the same in terms of trends, right?
Absolutely, absolutely. And what you also see are these shifts in buying patterns. Although the pandemic is history now, it's largely behind us, you still see traces of it in the data. If you break it down, the decline in December was relatively broad-based, with 6 out of the 7 categories declining in December. The only beacon of hope, the only increase in volumes was recorded for clothing and footwear, which is in line with higher levels of mobility by consumers. So now we spend much more time outdoors, and you also see that if you look at the hardware material sales, which did very well in 2021, and this year it was actually the worst performing category. So it shows consumers rotating away from the home improvement, the spending of time inside their homes, and now spending much more time doing activities outside of their homes, and hence they are buying more clothing compared to the previous year.
Okay, I understand. So when you're saying enhanced mobility, this is the idea that people are outside of their homes a lot more often, so they need more clothes. Could load shedding be a function of this as well? Because we've seen certain retailers, I mean, obviously there's the cost associated to load shedding, but there's also the fact that some malls do have power, and that is driving certain consumers towards certain malls. So could that also be a function of it?
It could also be a function, although I wouldn't expect it to linger for much longer. You see that if you look at the implied inflation of retail sales, it's still very, very sticky. It came in at around 6.8, 6.9%, and it's somewhere, it's hovered around that level for the past 3 months. So it's not coming down as fast as we initially anticipated. And if you take that and what is happening, combine it with what is happening in the labor market, we see that recovery in employment hasn't really recovered to the levels before the pandemic. Still around about 4% below the pre-pandemic levels. And if you take that and combine it with the load shedding that you've just highlighted, and its impact on corporate earnings, one could assume that we are probably going to see subdued wage growth this year. So we take all of these things, combine all of them. It's for us, it means we are likely to see subdued buying activity for the rest of 2023, unless we see something a bit more significant in terms of household support coming out of the budget, which is unlikely at the moment.
So taking all that into account, as well as the data that we've gotten from manufacturing, for example, how are you painting the outlook for the rest of the year, for retail in particular?
Right. So the December print for retail sales just underscores our view that the fourth quarter GDP is likely to come out poor. We think that we are likely to see a contraction in GDP growth for quarter four. But going into 2023, we think that growth is going to slow from an estimate of around 1.5, 1.6% to around 0.4, 0.5, which is hardly any kind of growth. And this takes into consideration the more intense and more frequent episodes of load shedding and the consequent impact of that on employment creation and wage growth, with which I've just highlighted. So for this year, we expect sub 5%, sub 0.5% growth, which is hardly any kind of growth, and that, in our view, is going to further hinder the employment recovery and by extension, the entire household consumption expenditure component of GDP.
Okay, with that, you've answered what was my last question. Siphamandla, thank you so much for joining us today. I guess we'll have to continue this conversation and just keep an eye on how retail sales are developing. That was Siphamandla Mkhwanazi, FNB Senior Economist.